Welcome to our guide on PAMM trading. PAMM stands for Percentage Allocation Management Module, a type of investment platform that allows investors to allocate funds to a trader who manages the account on their behalf. One of the main advantages of PAMM trading is that it allows investors to benefit from the expertise of professional traders without having to actively trade themselves. This can be especially beneficial for those who lack the time or knowledge to trade on their own. Another pro of PAMM trading is the potential for diversification. By allocating funds to multiple traders, investors can spread their risk across different trading strategies and markets. This can help mitigate losses in case one trader underperforms. However, there are also some cons to consider. One potential downside of PAMM trading is the lack of control. Investors must rely on the decisions of the trader managing their account, which can be risky if the trader makes poor choices. Additionally, PAMM accounts often come with fees and commissions, which can eat into profits. It's important for investors to carefully consider these costs before deciding to invest in a PAMM account. Overall, PAMM trading can be a powerful tool for investors looking to diversify their portfolios and benefit from the expertise of professional traders. Just be sure to weigh the pros and cons carefully before making any investment decisions. Thanks for watching our guide on PAMM trading. If you found this video helpful, please subscribe to our channel for more informative content on investing and trading.